Eric, it's great to see you. Thanks for joining us.
Kate, thanks for having me.
So we'll start with the news. Major funding round at a $13 billion valuation. Tell us some of the details. And this is also a secondary round. So what's gone on here? Who were the backers? And tell us all about the news today.
Of course, feel incredibly grateful. There's a $150 million secondary investment made into Ramp by a variety of folks, from Stripes to GIC to Avenir to returning investors like Khosla, Thrive, General Catalyst, investing into Ramp, which is now one of the fastest growing companies of all time.
And tell us what Ramp does. We were just talking about this intersection between sort of fintech, AI, software. How would you categorize Ramp?
You can think of it almost as a financial operations platform. From a single place, you can issue cards, make payments of all kinds, automate expenses, and even automate your books, accounting, all of that kind of stuff. But the overarching question that we try to answer is, how do you help businesses get more out of every dollar they spend and every hour they spend? And so there's about 30,000 plus businesses that use this, from some of the highest performing, fastest growing companies on the planet like Shopify and Notion, to leaders like CBRE with 100,000 employees, to everyday businesses are using it.
What kind of revenue growth are you seeing, and what justifies a $13 billion price tag?
I mean, for us, we truly believe we're one of the fastest growing companies on the planet. In 2023, we powered over $10 billion in purchases made every year on behalf of our customers. By the end of the following year, that had ballooned over $55 billion in transactions being powered through Ramp. And so, the last revenue figures we put out about a year plus ago was $300 million a year in revenue, and it's grown dramatically since then. And so, while I can't give the exact figures today, it's been incredible growth.
So is that coming through organic growth, or is there some sort of sales force? What's driving that?
Combination of things. And so first, our team is incredibly I think there's just a lot of pain in the market. For most people today, it's the worst hour of their month every month when they go and need to do their expenses. It feels very manual. With Ramp, it's a magical experience. You can just tap your card for a payment and your expense report does itself. And when the product's that good, word gets out. And so over a third of our growth is actually just word of mouth, companies telling other companies. A lot of this is a sales force augmented heavily by AI, and just a high net promoter score. Our NPS is the same as, right on the order of Apple's, which would put us in one of the most beloved products out there.
That's pretty rare for expenses.
Oh, for sure.
Personal note. Who are the competitors in that case? So is it like a Concur, or who would be, and does Brex do this too?
So for the big competitors, most finance teams, even a mid-market company with 500 employees, usually has 15 to 20 different tools. These are things like an American Express, or a Concur, or a Bill.com, or a Coupa. Ramp functionally can not only replace, but do a faster, easier, better job at all of them. And so in that way, it's sort of taking out multiple point solutions with one streamlined tool.
What about AI? How are you incorporating that tech into what you do?
It's a big theme. I mean, even in this last earnings seasons, over 90% of S&P listed company talked about AI in their calls. So every company is being challenged to answer the question of, how are you using AI in your finance stack? And Ramp is that answer. And so for companies today, you tap a card and AI will do your expense reports. We will automate your accounting. We can even help customers move their funds from lower yielding to the highest yielding accounts. And so we're using it for customers, and we're also using it for our team. We were proud to do our first Super Bowl ad. We made the decision to go and do that 11 days before the Super Bowl. We shot over 100 different versions of that ads prior to getting on set, all through generating video, sound, all of it. And so it's all about making people more productive.
Was that with Saquon, the Super Bowl
ad? It was, yeah.
Okay, good timing that they ended up winning the Super Bowl.
He was incredible.
That aged well.
we feel lucky, and he invested in the company too, and I think he's just an amazing person.
Oh, interesting. Okay, I didn't realize he was an investor. Yeah. What about employee sales? So that is a big part of the news that you're announcing, this ability for employees to get liquidity. What was the demand like for people that are working in private companies, probably want a little cash? How did that factor into your decision?
Yeah, I think it's just the right thing to do. People are pouring their heart and souls into making a company that serves others, and things can happen. Whether it's a relative who runs into maybe needs support for medical-related issues, to putting a down payment on a home, to putting a family member through college. We think it's great to make that option, and so it was great to make it available. We were also very excited that people were very, very bullish. and opted to continue to stay and hold on to so many shares.
We're sitting here at the NASDAQ. How are you thinking about an eventual IPO, and are you feeling the same pressure that startups might have felt a decade ago, where there's all of these different options to get liquidity? You don't need to necessarily go public. How are you thinking about the timeline of potentially being a public company?
I mean, for us, first, it's typically as companies get so much larger and grow as quickly as Ramp is, you're deploying and burning a lot of capital. What's so unique about Ramp is that the bigger we've got, we haven't really slowed down. We've raised $1.2 billion in equity. Last year, we burned less than $2 million a month, which is extraordinarily rare for a company that's growing that quick. And so there isn't what you would typically see, a strong desire, a need of a capital infusion that an IPO can provide. That said, I want this to be my life's work. I want to work on this for a lot of years, and I think companies that are seeking to stand the test of time often pursue going public. And so, while there isn't a particular timeline we have in place, you can feel the energy and excitement being in a place like NASDAQ.
It's interesting, too, from employees. I would think that pressure has sort of been lifted if you are able to do these sort of secondaries.
I think so. I think that's right. I mean, ultimately for employees like all of us, they're trying to invest towards the long term, build something that matters, but having the flexibility, I think, does go a long way.
What was the demand like from Silicon Valley investors? You mentioned some people doubling down, Khosla, for example, but others maybe looking to get an allocation into Ramp. We think of, I guess you guys are sort of an AI fintech hybrid, but there's been sort of this bifurcated market in private markets where it's AI and it's everybody else. You guys sort of sit in the middle, but what have you seen? Just give us a flavor of kind of the conversations with investors and demand for things that are not pure play AI.
For sure. I mean, so part of what made this run, the demand was overwhelming to invest in Ramp, and back to it, we didn't need primary capital, so we're fortunate to be able to welcome these investors, and they wanted to be a part of Ramp for a couple reasons. One, the extraordinary growth, but they're investing to make a return, and the stat that people were most excited about was when they saw that over half of every dollar that Ramp puts into payroll-related expenses goes into R&D. That's just really different. It's what drives the experience where customers today feel that every year they use Ramp, it's getting dramatically better. It took us 4 years to save our customers $1 billion, automate 10 million hours of work. We did what took us 4 years earlier in the company within 1. And so it's accelerating. I think investors see that as the function of finance is going to change a lot, Ramp really is the bet of the leading company that will accomplish this and change this for customers.
So you've been around for 6 years, you said, is that right?
That's right.
And so sort of that, you've lived through the zero interest rate era, free money era, into this higher rate environment, but also just different environment where it seems like folks have gotten leaner and sort of changed the way they think about things. Maybe talk about the trajectory of starting a company in that era and maybe needing to change course a little bit or adjust. What was your experience like as a CEO through that?
Oh, for sure. I mean, look, I think our core value proposition, helping businesses achieve more with less, spend less, went from a nice to have to truly it made the difference between whether you would exist or not in 2022 and 3. And so while we had to make sure we were scaling efficiently, it dramatically accelerated Ramp's growth. In the year 2022, we grew on the order of 4 times year over year because companies were seeking to do this. And so, I think that idea of spending less has never gone out of style in some sense. I think that the other thing that's top of mind, I think, for everyone is in this era where, not just rates are different, but computers can think, reason, hear. I just think we have a chance where we're not just moving money, but ultimately automating work. And so we're doing things in very simple ways, closing your books automatically, doing your expenses. But as time goes on, I think that the bigger picture and what drives us is, for most of the past 40 years, if you weren't a bank, you couldn't move money. And so cards, bank accounts, these things never really evolved and became advanced as the rest of the world did. And so that's the bigger backdrop that has propelled Ramp's growth.
Has there been any interest from the bulge bracket banks maybe coming to try to buy you guys? It seems like they've been interested in scooping up fintechs at various points in time.
We feel really, we partner with a number of JP Morgan Chase, for example, is a very close partner of ours on the money movement side, and we work, Citi is an investor in Ramp. We partner with banks, and so, I think it's a very complementary relationship.
but nobody's knocking on your door saying, hey, we're looking to scoop up a fintech, maybe you guys are the right partner. I mean, I'm sure you can't name names, but have you gotten any of those inbounds?
There's a lot of excitement and awareness too. I mean, I think even on one of our competitors' earnings calls, people ask specifically about Ramp and how they're thinking about upstarts that are serving customers in a new and different way.
Who are most of your customers? You mentioned startups. I thought that was really interesting, just the cost cutting probably benefiting your own growth, but who would be sort of the typical partner customer for you guys?
Of course. So, a typical business has on the order of call it 300 to 1,000 employees. These can be farms, local healthcare systems, education, retail, or even startups. So it really spans the gamut. But usually the common need is it's just too hard to run the business. You have your best salespeople doing expense reports, not going out and selling. You have your finance team jumping between different tools, and so every industry is required to audit their books and records, keep clean transactions, and so we make that simpler. But I think that the thing that's changed over the years, Kate, is we're serving increasingly larger businesses. Our enterprise business, serving companies with several thousand employees, more than doubled over the past year, and I think that even the way the tool is being used has changed. When we started, it was an easier to use card that automated your expenses. Now I think of customer stories like Poshmark, a large scale marketplace that set out a goal a year ago to, achieve its cash flow goals in 12 months, was able to do it in 7 because of the automation Ramp created for them. And so I think it's evolved to anyone trying to run a better business is turning into customer.
What does the roadmap look like from here? Raised a little bit of money and now have a $13 billion valuation. What's your plan for the next couple of years here in terms of growth and getting even bigger?
Yeah, a couple things. So today we're already between 1% to 2% of the entire U.S.'s corporate and small business card market, and we can't wait until we're serving more businesses. We're 3 to 4, 5 to 6, 10 plus, and so we're really pursuing scale as one. Second is breadth. We do cards, bill payments, procurement, treasury, heavy accounting automation, and so we expect to, as AI is improving, help make keeping of books and records automated, help companies allocate capital more efficiently. And so thinking a lot about that, but ultimately what drives us is how much we save customers. And so while we're saving more than $1 billion a year for customers and 10 plus million hours per year, we expect all those figures to grow significantly. So
too soon to talk about an IPO here at the NASDAQ. When should we expect? Do you have any sort of timeline or horizon for maybe being a public company?
I think that I think many great companies do go public. It's something we're thinking a lot about. Great investors like GIC, they manage on the order of $1 trillion in capital, and so investors who can invest in anything are choosing and opting to partner deeply with a company like Ramp. And so we're very excited, and certainly being here at NASDAQ gives me a lot to dig into.
Yeah, well, Eric, it's great to see you. Thank you for joining us and walking us through the news.
Thanks a lot, Kate.